yesterday's class, we'll discuss the receipts and payments account. Okay, and pro forma of receipts and payments account. And now today's topic is income and expenditure account. Income and expenditure account. Income and expenditure account. Okay, under this method, what is income and expenditure account? Okay, we will know the pro forma of this income and expenditure account. Okay, first see the income and expenditure. So this account is equivalent to the profit and loss account of a business enterprise. Okay, this account is relating to a profit and loss account. So it is prepared by matching the revenues. It is prepared by matching the revenues against the expenses for a specified period. Against the expenses for a specified period, usually a year. Since these non-profit organization do not earn a profits. Okay, in the name itself is there as a non-profit. Okay, so in this non-profit organization, they do not earn profits. They incur losses. So that's why they do not prepare on a profit and loss account. Okay, they will not earn a profit. So that's why they will not prepare a profit and loss account. But for evaluating the financial condition of the organization, they will prepare this income and expenditure account at the year end. This account shows the surplus or deficit of income over expenditure. For evaluating the financial condition financial condition of the financial condition of the organization financial condition of the organization, they prepare income they prepare income and expenditure account at the year end. At the year end. So this account shows this account shows surplus. This account shows surplus or deficit of income over expenditure. Okay, got it. they will prepare this income and expenditure account at the end of the year. Okay, we will prepare this account at the end of the year. Okay, for this preparing account, we will know the surplus or deficit of income over expenditure. Surplus or deficit of income over expenditure. So the method and technique of this preparation of income and expenditure is similar to that which is followed in the preparation of profit and loss account of a profit seeking concern. Okay, for preparing this profit and loss account, the main objective is what? Earning profit. So the main sources of revenues of these organizations are subscriptions. Already we discussed meaning of subscriptions, admission fees, donations. Okay, under that donations there are two types of there. One is general donation and second one is specific donations and government and other grants. So the whole of this revenue income and revenue expenditure for the period are taken into consideration. So that irrespective of this fact whether they have been actually received or paid or not. Okay, just like this profit and loss account, all accrued incomes and outstanding expenses are shown in this account. Okay, under this income and expenditure account, we will show the all accrued accrued incomes and outstanding expenditures are shown in this account. Okay, under this income and expenditure account, all incomes are shown on the right hand side, that is income side, and all expenditures are shown on the left hand side, that is an expenditure side. No capital expenditures and capital receipt is taken in the income and expenditure account. Only revenue items are taken here. If the right hand side total of this account exceeds the left hand side total, so the balance is a surplus. Suppose if credit side is more, debit side is less, so for recovering that amount we will known as this surplus, or it is called as an excess of income over expenditure, and it is called as an excess of excess of income over expenditure. So conversely, if the left hand side total exceeds the right hand side total, then the balance is called as an deficit. Suppose our debit side is more, credit side is less, so that credit side lessing amount will be there na, so that less amount is known as an deficit, or it is called as an excess of expenditure over income. Now see the several features are there. Features of an income and expenditure account. Okay, so mainly this income and expenditure account is a revenue account. Okay, mainly it is an a revenue account prepared at the end of the financial period. Prepared at the end of the financial period for find out the surplus or deficit of that period. Next is it is prepared by matching expenses against the revenues of the period concerned. Matching expenses against the revenues of the period concerned. Next is both cash items, non-cash items such as depreciation or any expenditure or any prepaid expenses or any outstanding expenses that will be taken into the consideration. Next is all capital expenditures and incomes are excluded. Okay, all capital expenditures are excluded. Only current year's incomes and expenses are considered. Under this income and expenditure account, only the current year's incomes and expenses are considered. Now see the format of an income and expenditure account. Pro forma of pro forma of income and expenditure account. Forma of income and expenditure account. Here name of the concern means any name of the businesses, name of the concern, name of the concern, income and expenditure account, income and expenditure account, income and expenditure account for the year ending, for the year ending here we'll write the end of the year. Left hand side is debit, right hand side is credit. Okay, debit side don't write particulars. Okay, on the debit side we'll prepare as an expenditure, expenditure amount, expenditure amount, income amount. Expenditure amount, income amount. Okay, first write down on income and expenditure side. To salaries and wages paid. To salaries and wages paid. Okay, for the salaries and wages paid, we added outstanding at the end of the year. Okay, we added, remember these words. Okay, we add salaries and wages to the is in outstanding at the end of the year. Less, we less the outstanding in the beginning of the year. Next is, if any prepaid expenses at the end of the year is, that will be deducted. And if any expenses is given like prepaid expenses in the beginning of the year, it will be added. Okay, next is to rent rates and taxes. To rent rates and taxes. To rent rates and taxes. Next is to insurance premium. To insurance premium. To insurance premium. Next is to depreciation on furniture. To depreciation on furniture and sports equipments. To depreciation on furniture and sports equipments. Next is to books and periodicals. To books and periodicals. To books and periodicals. Next is to audit fees. To audit fees. To printing and stationery. To printing and stationery. To printing and stationery. To honorarium. To honorarium. Honorarium means under this any amount paid to a person who is not an a honorarium means any amount paid to a person who is not an employee of the organization for rendering services to the concern is called as an honorarium. Example is doctor. So doctor for treating the patients and providing services for the specialized in nature. The next is to honorarium. Next is to bank charges. To bank charges. to bank charges. Next is to postage and telegram, to postage and telegram, to postage and telegram. Next is to electricity and water, to electricity and water. Next is to convenience and traveling, convenience, to convenience and traveling. Next is to sundry expenses, next is to sundry expenses. Next is to loss on sale of assets, to loss on sale of assets. To loss on sale of assets. To newspaper and magazines. To newspaper and magazine. Okay, these are on the expenditure side. Next, come to the income side is by subscription received, by subscriptions received, by subscriptions received. We don't know how to calculate subscriptions amount if they given in outstanding subscriptions at the end of the year, outstanding subscriptions at the beginning of the year, advances given in at the end of the year. So we calculated that amount in a working notes and write down that amount here. And next is by entrance fees, by entrance fees. This entrance fees amount only taken that portion which is to be treated as an a revenue. Okay, revenue only, not an a capital income. Only revenue incomes are taken. Next is by general donations, by general donations. Next is by life membership fees, this life membership fees is also taken as a portion which is to be treated as an a revenue. Next is by By profit from annual dinner, by profit from annual dinner contribution, annual dinner contribution, less any expenditure is given, we deduct that. Relating to these only, expenses, next is by profit on annual sports, by profit on annual sports, by profit on annual sports, next is by rent of club hall, by rent of club hall, by rent of club hall, next is by dividend and interest, by dividend and interest, by dividend and interest, next is by sundry receipts. Here are the expenses, here are the receipts. By sundry receipts. Okay, so next is by interest received. Interest received on the expenditure side is interest allowed. Next is locker rent. By locker rent, by locker rent, next is by profits on sale of assets, by profits on sale of assets, okay, by profits on sale of assets. Okay, so these are the expenditure side and income side. Now see here, very important is if credit side is more, that is income side is more and expenditure side is less, so then this amount is known as an a to surplus, to surplus, that is excess of income over expenditure amount. Okay, so we'll get the both sides same. Excess of income over expenditure, excess of income over expenditure. Or else, suppose if debit side is more, okay, if debit side is more, credit side is less, we'll write the for that lessing amount is an a deficit, by deficit. This deficit means excess of expenditure over income. Excess of expenditure, excess of expenditure over income. Excess of income over income. Okay, so this is a proper of
Session. Five months.
okay. Next, see the problem. Uh, okay, before going to the problem, we'll discuss the difference between the income and expenditure account, receipts and payments account.
పైన గొడుగు ఉంది కదా తీసుకో.
Okay, now we'll see the difference between the receipts and payments account and income and expenditure account. Okay, difference between difference between receipts and payments account, receipts and payments account. Next is income and expenditure account. Okay, difference between receipts and payments account, income and expenditure account. Okay, so first difference is, so this receipts and payments account is a real account. Okay, it is a real account. Okay, it is a real account. Okay, and this income and expenditure account is a nominal account. It is a okay, income and expenditure account is a nominal account. income and expenditure account is a nominal account. Next is, so this receipts and payment account is a statement of cash transaction for a particular period. Next, under this income and expenditure account, it is a revenue account. Okay, this income and expenditure account is a revenue account showing income and expenses of a non-trading concern for accounting period. Showing income and expenses of a non-trading concern for accounting period. Next, under this receipts and payments account, it includes the both capital, it includes both capital, it includes both capital and revenue items. Okay. Under this income and expenditure account includes only revenue items. It includes only revenue items. It includes only revenue items. Next, it besides the item of current year, besides the item of the current year, item of current year, so it may contain the items of previous year or the next year. It includes the current year, previous year and the next year. These years are included, but under this income and expenditure account, it includes only the current year. It does not contain the item of previous year or the next year. It contains only the current year items. Next, under this receipts and payments account, it does not include outstanding items. It does not include outstanding items. Next is, under this receipts and payments account includes the outstanding items. Here not outstanding items, here outstanding items. And next is, so this receipts and payments account begins with the opening cash and bank balances, but under this income and expenditure account, it does not begin with any opening balances. Next is, under this receipts and payments account, receipts are shown on the debit side and payments are shown on the credit side. As an income and expenditure account, expenses are shown on the debit side and incomes are shown on the credit side. Okay, we'll know the balancing figure. If which side is less, what is called as, okay. So these are the differences between the receipts and payments account and income and expenditure account.